everyone. Happy Tuesday and happy May. Today is May 18, 2021. Welcome you all joining today's class. Savor at home and learn. Unravel the nuts and bolts about home and condo insurance. I am Pauline Lam from Cotai Realty, your 2021 co-chair education committee, West and Gabriel Valley Realtors. A friendly reminder, all participants will be muted, and should you have any questions, please enter it into the chat box. Speaker and Sylvia will helping answer the Q&A section. The section is being recorded and will be available on the YouTube channel, West and Gabriel Valley Realtors. Now, I'm so glad to have Miss Sylvia Rosich, our beautiful Sylvia, co-vice chair of Education Committee this year, to introduce our very, very special speaker, Mr. Mark Wu from Allstate Insurance. Sylvia, the floor is yours.
Thank you, Pauline. Thank you very much. Good morning, everyone, and welcome again to our Safer at Home and Learn program. Today, we have a special guest, very well known to our members of the association. His name is Mark Wu with the agency Allstate. Now, he's been in the business for 33 years. He's been over 20 years a member of our association, a 3-term affiliate, and 2 vice chair. So please help me welcome Mark Wu to the stage. It's all yours, Mark.
Thank you, Sylvia, and good morning, everybody. Can everybody hear me okay? Well, my name is Mark Wu. I've been an Allstate agency owner servicing the San Gabriel Valley for the last 33 years. I appreciate the opportunity to present my class to you. I just want to introduce my family to you. Been married to Susan on my right, oftentimes misplaced as my daughter, but my family there. So my wife, Susan, who I've been married for 32 years. And then my daughter to my left, the eldest, she works out of Irvine in marketing. The youngest beside her just completed her freshman year at Concordia University. And then to my right of my wife, Kayla, who is gonna apply to be a physical therapist. So she will be getting hopefully into school so that I don't have to support her anymore and get her doctorate so that she can have a career as a physical therapist, graduate as kinesiology major out of APU. Oftentimes people wonder, do you just do home insurance or whatnot? But we offer many lines of insurance out of my agency. So you see that all there. And we also provide financial products, which is surprising to many, but I have a financial specialist that works with many of my clients. We offer free financial advice. We don't charge a fee for that. And so I know many of you are realtors and oftentimes don't have a company that's providing a retirement. So if you need assistance with that, we are not a pushy agency. We try to meet your needs and make sure that you have enough money to have some financial security or at least some money when you do decide to walk away from the business. Of course, most people don't in the real estate market. So, but anyways, it's good to have that extra cushion. I do support, as Sylvia mentioned, I've been a 5-year affiliate, either chair or a vice chair. And I continue to do seminars throughout many of the brokerages. I had the privilege of doing it not only at Pauline's office, but many others in Coldwell Banker and whatnot in the area. And I've been an active member. So there has not been a year that I've taken off the board. As you'll comment, many of the seasoned realtors know, affiliates come and go, but there are a few of us that are core members that have always been here, and because this is our home and I love this board. My staff, I want you to meet my staff. Gabby, who's been with me for over 20 years, and then Sarah speaks Vietnamese, Mandarin, and Cantonese, and then Rosanna Morrison, who many of you know as Morrison Inspection. She has joined my staff to be our marketing rep. And then, of course, Milton didn't want his picture up there, but he does the financial products and had been a part of my team for over a decade. So again, we support a lot of charities. You know, I've been very blessed in my life. San Gabriel board has also assisted me in my business to build up my agency. So we've given back to a lot. And so in this latter part of my career, I love to go and help. Women's initiatives are very important to me just because I've been surrounded by girls and women. So I try to give back to in really poor developing countries. They say that if you help a man and give him $1, he's going to spend over 90% of it on smokes and alcohol. But if you give $1 to a woman, she spends that 90% back to the family, and that's how you build up the entity. So we oftentimes try to equip people with micro loans where they are able to not only feed their family, but able to also take care of the family for future needs. So that's really dear to my heart. And as COVID opens up, I will be going 2 to 3 times a year to foreign countries that I support these missions in. So anyways, we'll get on with the class, which is the important thing. And hopefully I can figure out how to do this. So bear with me. So the first thing we're going to talk about is condo insurance. Can you guys all see the slide? Okay, good, Sylvia. Thanks for the thumbs up. So basically, it's normally referred to as a HO6 policy. So in the past, like probably about over 10 years ago, if a buyer was buying a condo, they weren't required by their lenders to get a HO6 policy. But what happened was Fannie Mae and the crisis and the crash of 2008 and 9, when there's a lot of foreclosures and banks were taking back all these loans, they were finding out that, hey, you know what, we're lending out all these monies to our condo buyers, and then in event of a claim, what was happening is that they realized that the master policy had many gaps, and so they were getting nailed with 20, 30, up to $100,000 worth of claims on these condos that they had acquired back. So what they did was that they came back and said that anytime there's a loan on the policy, a Fannie Mae loan, they're going to require 20% dwelling coverage on the purchase price. And so now, unless you're a cash buyer, everybody has to get condo insurance or the HO6. So what is it, first of all? Why is there a need for a HO6 or a condo policy? Well, first of all, many buyers assume that, hey, if there's a master policy, then we don't need to have this coverage, and therefore, why get it? In fact, about a month ago, we had an unfortunate situation where the realtor that was representing the buyer was telling them that they didn't need the condo insurance because of the fact that the master policy even covered the walls in and all that. And I'll go through a reason why you don't want to ever say that, make that mistake and say that to your buyers, because it can get you in a litigation because you are saying something that is inaccurate. All right. And again, many master policies don't cover the interior structures or interior liability. What they do cover is the common walls and whatnot. So it's important that a buyer do get a HO6 policy. Also, the personal belongings, is the responsibility of each individual unit owner, and so is the personal liability. So we will go through an exercise so that I can show you that. So oftentimes I get, well, Mark, how do you know what is the responsibility of the individual unit owner and what is the responsibility of the whole association? And you can't tell by just the looks. You can't look at a condo and say, hey, this part of it is covered by the association and this part is covered by the individual unit owner, because you can have two exact duplicate condos side by side, and if their CCRs are written in a different way, they will be vastly different in what the unit owner has to do versus cover versus what the association covers. So the CCR is the key. All right. There's a section in the CCR that says insurance requirements, and that's where one needs to go. Now, I've been told oftentimes that it's from attorneys and all that, it's really prudent for you folks not to say what is and what shouldn't be. Just advise the client to the buyers to go to the CCR and read it for themselves, because unless you're an attorney, you shouldn't be reading that specific thing to them and then interpreting for them. That way, you again, my responsibility has always to try to teach my fellow realtor buddies to just stay out of litigation, because that's the kind of business I am, in protecting liability issues and whatnot. And so that's something that we strongly suggest you don't do. Let the clients, let your buyers figure that out. So here are some condos that have got, this is a wind damage kind of condo claim. We saw, many of you probably have seen this happen up and down, our streets in Arcadia and whatnot when we have those big Santa Ana winds. In fact, I have a situation right now where somebody, the big old tree fell on top of them, a realtor that in one of the office, and he posted the picture. This is what happened. Thank God I'm okay. And that just happened yesterday that I saw that picture. Again, most people know fires to a condo is a covered peril. So what makes up part of the condo policies and whatnot? All right. The first one is the dwelling. Remember that I said that each individual owner is responsible for their own dwelling. And what that could be is that dwelling is an attached structure to the condominium. All right. So it's not a detached, but it's an attached structure. So like I told you before, now we're required to put 20% of the cover of the purchase price on dwelling coverage. So if Sylvia's purchasing a house and she's getting a Fannie Mae loan, and I see Judy there, so say she got a loan from Judy, and it happens to be that it's a $500,000 purchase, then Judy's lender, as a lender, is going to require me to give her a binder of 20% of that 500,000, which is 100,000 for the dwelling limits. All right. So it's 20% of the purchase price that I have to put as dwelling coverage, even if Sylvia doesn't need that much. Unfortunately, I have to come up with 20% of the purchase price. The other thing that's typically covered under a condo policy is personal property, things like furniture, stereo, appliances, clothing. What Sylvia would take into a moving truck, as long as it's not business related, we're going to be covering that under a normal HO6 policy. All right. So and if Sylvia has like super expensive firearms or jewelry or things like that, then you need to endorse the policy, because there are limitations as far as the maximum a company will cover on those events in event of theft. But in event of fire, wind, hail, smoke, explosion, the companies will pay up to the coverage amount of that. The next thing that typically is part of the HO6 policy is that it typically covers additional or loss of use or additional living expenses. What that means is that in the event that Sylvia is not able to, let's say she had a fire and she's not able to stay in her condo in San Gabriel, and it takes 10 months to rebuild. All right. The policy will have sufficient amount of money for her to be put up someplace else while her condo is being rebuilt. So that's a super important coverage, and it's called loss of use. Then there's two portions of a liability. All right. There's personal liability, and then there's also medical payments. So I'll talk about personal liability and how that works. There are situations that can arise as a personal condo owner that the master policy doesn't provide protection from. So let's just say that there's a common area pool and whatnot, and somebody gets injured on that pool, around the pool deck, and sues the whole association. What normally happens is that the association will be the one that's responsible for that. But let's say that now Sylvia had a son there, and the son was horsing around and pushed somebody into the pool. What an attorney will do is not only sue the association, but they'll also sue Sylvia under a personal liability. So if Sylvia doesn't have a liability policy, then she has no coverage for that. And as a result, they will come after her because the son pushed somebody and that person was injured, even though it was a common area. they're still going to come after her because it was a result of her son's action that caused the injury. On the flip side, here's another example of personal liability. What if Sylvia has a dog and that dog bit somebody, right? She has a Chihuahua, but that Chihuahua is fierce and mean, and that Chihuahua bit Pauline. What's going to happen is if Pauline doesn't like Sylvia or whatnot, doesn't know Sylvia, Pauline's going to say, hey, your dog bit me and I have $800 of medical bills and I need to be compensated for that. If Sylvia has this HO6 policy, which contains this personal liability insurance, the policy will pay for Pauline's injuries and all that. All right. Also, Sylvia is a golfer. She happens to be golfing and happens to hit a ball, and it breaks somebody's window or it knocks somebody's head. In fact, if you know Maria Howard, she was on a golf cart course and got hit by a golf ball. She does home warranties and whatnot. So things like that happen, but basically personal liability is part of a policy that will provide protection, in the event that somebody comes after you and are injured within, your house or even out, depending on what the situation is. Another situation that happens is she's throwing a party, and unfortunately she loves Pauline, but Pauline brought a friend with her, and the friend got injured inside Sylvia's house, right? Don't know how, but she slipped and fell inside the house. Well, the association would say that injury was sustained within Sylvia's unit and not in the common area. So they would pay out $0 amounts for that injury of Pauline's friend. And so let's say that the Pauline's friend broke their knee and whatnot, and now has sustained, $30,000 to $50,000 worth of medical bill. If Sylvia has this HO6 condo policy, the personal liability would pay for that to happen. I mean, pay for the injuries and whatnot if Sylvia is deemed to be, responsible for that. Now, it can't be an intentional act, meaning that Sylvia can't go and cold cock and hit Pauline's friend with a bat and say, I don't like you, you're acting stupid, get out of my house, and then wax her over. That's an intentional act, and that won't be covered. But accidental acts is going to be covered. Here's a situation where she's invited Pauline over, and so Pauline happens to choke on something, not out of the negligence of Sylvia or whatnot, calls the ambulance. If Sylvia deems so, she can claim under the guest medical. And what that does is that will pay up to $1,000. So for the ambulance, whatnot, it doesn't have to be negligent or whatnot, but just that there was some accident that occurred inside her unit. So things like that, again, it's a good coverage amount. And you'll see some of these repetitive when I talk about the homeowners, but it is something, like I said, that is super, super important. So I'm going to go through a live scenario case, and I am going to utilize, Sylvia is actually a very excellent agent, but I'm going to make her a terrible agent because she's never been through Mark Wu's School of Insurance. All right. So Sylvia is representing her buyer, Pauline. Pauline is a cash buyer. And so we're buying a condominium, and the condo costs $600,000. Is that a pretty decent? I mean, and now it's on the low end. It used to be on the higher end when I started my career, but now it's on the low end of what a condo costs in San Gabriel. So let's just say that Pauline, cash buyer, not filthy rich, but Pauline has $610,000, but she decides, I don't want a payment. So she throws her whole $600,000 into buying this as a cash, because that's the only way in this market, per Sylvia's advice, that Pauline can get a condo. And unfortunately, that's sadly true, right? Cash buyers are winning. So Pauline goes, hey, Sylvia, do I need any other policy? And Sylvia goes, don't worry about it. There's a master policy. That is actually a true statement. She doesn't need it to close on the escrow, because why? Sylvia didn't get a loan through Judy. So they can't require, right, a condo HO6 policy. So we go along, and so this policy probably would have ran, say, anywhere from $500 to $700, depending on what, with whatever company. but we're going to go through a situation. So this is a 5-unit condominium complex in San Gabriel. The master policy has $2.5 million on it. The whole thing burns down. All right. So that means that there's $200,000 shortage on the policy. The interior loss to Pauline's unit is $55,000. She's lost all her personal belongings, her fur coat, her jewelry, her appliances, her furniture, her computer, her artwork and whatnot. And I know Pauline, she has a lot of fine artwork. So she's lost all that to this fire. It's going to take us 10 months to rebuild. Here's what's going to happen. And unfortunately, I can't see my right side of the screen because all the photos are there. So hopefully I'll read the right amount. So again, the first part of it is she lost $55,000 in interior. Here's the interior damage. The CCNR says, Pauline, you aren't responsible for the common walls, but you are responsible for all the interior walls. You are responsible for the flooring. You're responsible for the the cabinets in the condo, and you're responsible for all the wall coverings. Can that equal up to $55,000? Absolutely. Or sometimes what a CCNR will say is, you know what, we will cover all that. But once Pauline made a change on any of that or any other, even the sellers, if it was changed from the initial project, meaning that somebody did a remodel, that automatically gets thrown into the responsibility of the personal unit owner. Okay. So 55,000 is not unreasonable. And remember, had Pauline gotten a loan on this complex, we would have had to put 120,000 on the policy on a HO6. That's 20% of the 600,000. Does everybody get this? It's kind of hard to teach this class because I'm used to getting feedback and I can't, I only see a couple of people's reactions. So I'm going to pretend that you guys are all paying attention. The second thing that happened is content coverage. So all those things that I said got burned down. So if Pauline can't go to the master and policy and say, hey, my condo got burned down, replace my furniture, stereo, appliances, clothing, whatnot. They'll say, sorry, our master policy doesn't cover you. Had she had a HO6 policy, then she would have been covered for the whole $45,000. Pauline would have. Then, I picked a low amount, but is it unreasonable with the thumbs up to rent out if it's a 3-bedroom condo? Is $2,500 out of line, per month? It's not. And so let's just say that took 10 months to rebuild our complex. That means the policy on the master policy says, sorry, we don't pay for you to live someplace else while we're rebuilding this condo. But if you have a personal HO6 policy, it would pay for that amount. And then loss assessment, what that is, okay, that's loss of use. Loss assessment is where if there's a shortage in a policy, what the CCNR says is that all the unit owners have to proportionately come up with that difference. So you see how we used to have $2.7 million the loss was 2.7. The coverage amount of the master policy was 2.5. However, we're short $200,000. Therefore, that $200,000 is assessed to each individual unit owner. And in this case, that would be 200,000 divided by 5, which is $40,000. So you can see that the total loss, and I can't see that third figure, so it's either 160,000 or 165,000 on this claim. Guess what, Pauline, not being Sylvia's friend and not being the sweet Pauline Lamb that I know, but the person that only has 10 more thousand in the bank, and she suffered 160,000 in loss. She can go back and see a little comment and email that Sylvia responded and said, hey, don't worry about getting an HO6 policy because there's a master policy. An attorney would take Sylvia to the cleaners. Now, not the Sylvia we know here, but the bad Sylvia realtor, because she has a double persona that represented Pauline. So again, to save this little $500 to $700 policy, this has exposed her. And so as a cash buyer, fortunately, you guys now, unlike in the beginning of my career, when realtors didn't have to do that, you guys are safe normally as long as there's a lender in it, because they're going to have to get this HO6. So this is more to say that when you're involved with a cash buyer, do not, if you don't remember anything I taught you about condo insurance, tell a buyer that they don't need their own HO6 condo policy, because they do, because it will totally involve you in a litigation. Again, come back to the bottom two that we didn't talk about, but the guest liability or the family liability. Remember, if Sylvia's dog bit somebody, or Sylvia's son hurt somebody in the pool, or she's washing down the sidewalk and somebody slips and falls on a common area, that's family liability. And the policies encompass that. And so the the master policies won't cover any personal family liability that occurs. So that is my presentation on the condo. And I can't see the chat. So does anybody have, I don't know all the answers, but if I don't, I can find it. But anybody have any questions on condo policies before I go to homeowners?
Yes, there are some questions there for you.
Okay.
The first one, let me see. Okay, I see. Okay, from Kui Nguyen. Is it true that Allstate tries to limit writing homeowner insurance because a lot of my clients were brokered out to other companies?
Okay, we got to preface this because I can't, since it's recording. These have to all be general in nature because I'm representing AMS. But if that person wants to take me offline and all that, I'll be happy to answer.
Okay.
I don't want to answer any
Okay.
specific questions, but general questions in nature, if that's okay, because that's what I've been always taught in my 20 years that we do in these classes. So I'm not going to talk bad about a company. I'm not
Okay.
going to talk good.
Yeah, and I did post your email and I did post your contact on the chat, and so did Pauline. Now, the next question came from me to you. When you say expensive jewelry that we need to endorse the policy, what do you mean? Are you saying add additional coverage?
Yes. So you can schedule it. So you know that diamond ring you keep flashing that's about 10 grand, Sylvia? That would, there is a limitation when it's stolen out of your premises. And normal companies just put a limitation of around 1,000 or 2,000. So what you have to do is schedule that. And when you schedule that, you're paying extra premium for that specific individual $10,000 ring. All right. It's going to be costly because it includes what they call mysterious disappearance, meaning that Sylvia is going and she likes to dress up with fine jewelry and all that. And she happens to be attending a gala, and she takes the ring off and puts it down, washes her hand and looks suddenly and it's gone. And she can't prove that it's been stolen. That scheduling will cover that. All right. Or you're at a hotel and you go, I know I left it on my dresser, and when I came back, the maid took it, but you can't prove there's break-in and entry, right? So that's how you schedule the ring for that. However, if it was burned down, then in that 45,000 in coverage, we would cover that for wind, hail, smoke, explosion, and all that. So jewelry is something that all of you ladies, and here's how you decide that. Can I afford to lose and take the risk of $1,000, 2,000 ring? Many of us can, and so you don't have to put extra coverage on that. But some of you guys have a lot of costume jewelries, don't need to insure that from a specific individual standpoint, but you may have one or two pieces like 3-carat diamond studded earrings or whatever. Those type of items you do need to have it scheduled, and that costs you extra money, but it's well worth it. And you do have to have appraisal.
Okay. Now, the next question from Gary Pan. How much should a normal condo dwelling coverage limit be if the master policy only covers up to the bare wall?
Right. So remember, that question depends on whether or not it's a cash buyer or not. All right. So let's just go back to what I said. If it's somebody that needs a loan, then we put 20% of the purchase price. Like some of these, and I didn't think in my lifetime I would see condos that were $1 million or $2 million, but I'm seeing that in Pasadena and downtown area. But let's just say you have a condo in Pasadena, one of those penthouse that are $1 million. I have to put 200,000 in dwelling coverage on that. All right. But let's say at the same time, I'm buying the same old condo that you sold to Pauline. And I know from the things that, hey, normally what we try to do is at least put anywhere from $35,000 to $50,000 if there's not a lender required, because that's oftentimes sufficient enough to cover what I am told on the CCNR. So really, we look at what the value and cost of the condo is to kind of determine. And so if Sylvia is coming to me and says, hey, I just sold Pauline. Now Sylvia is a good realtor, which she is. And she happens to say, I'm bringing Pauline to you and she's paying all cash, but I can tell you, Mark, that the prior owner just remodel and put fine granite and whatnot on it. We're going to bump up that coverage in our agency. All right. And we're not going to sell just 40,000 in coverage. We're going to sell maybe double that. So
Okay.
I'll ask, what was
Okay.
the remodeling cost, or what do you anticipate?
All right. So we're going to go to, we have 3 questions, and then I guess we can go back to to the other part of the, of what you have for us. Okay. Judy Cho, how's the 45,000, 40,000 and all on the HO6 determined?
Okay, okay. So the loss of you, I'm sorry, the loss assessment is you buy up to $50,000 or 25,000. So those are set limits. All right. The as far as the loss of let me see, what was the other question? That was the loss.
You want to hear it again? Is that the question?
No, I see it. So
okay.
there, on the loss of use, many companies just say up to 12 months. I just picked a number on that. So the content amount is driven by the specifics. Like if you tell me it's a 3-bedroom condo or whatnot, and depending on what address and all that, the systems will give us a approximate amount. And then we go back to the buyer and I would say, hey, Pauline, do you think you have up to $45,000 worth of personal belongings? Pauline may say yes or no. If she says, oh, I have way more than that, then we will raise that up. So it's not a required amount. The only required amount, Judy, and all realtors or affiliates on staff, is the dwelling amount that the lender is requiring us to do, which is 20% of the purchase price.
Okay. Okay. The next question, on the case study that you're showing us, if they get the HO6 policy, how much would that have costed?
Yeah. So, I don't know, because it's actually driven also by area and zip code and whatnot, but roughly between $500 and $750. Very inexpensive, which is $60 a month. So that statement of bad Sylvia saying, Pauline, don't buy the HO6 policy, and Pauline suffering the $165,000 loss. I mean, do you think she's going to come back and say, no, Sylvia, you saved me $700 of insurance? Or is she going to say, why didn't you tell me, bad Sylvia realtor, to buy the insurance when it was only $60 a month, right? Unfortunately, our clients, whether it's in my business or even in your business, they love us when we save them money. They will come after us with a vengeance on the whole if we cost them money, because there's nowhere else for them to go after.
Okay. The question from Gary Penn. What would a terrorism right in a master policy cover?
Well, just acts of terrorism that because many policy excludes terrorism in the event that, terrorism is the result of the destruction. So, and that's very inexpensive. I have my own opinions of that just from where I live. I guess if I'm living in New York, I'm more concerned about it. If I'm living close to downtown LA, I'm more concerned about it. I always say, on the record, I say, get it. Off the record, I always deny it, even on all my own policies and investments, because I don't know how many times we're going to have terrorism happen in San Gabriel. I've been in this community for over 50 years. So.
Okay.
With that,
let's see.
To the homeowners, or you want me to continue?
Well, we have just, I guess, a couple more questions, but then I guess after that, we'll leave it and then go back to the chat.
Because I want to spend some time on homeowners, just because.
Exactly. So go back to back to where you are now, and then we'll leave those questions for at the end. Or if we can't, then we'll wrap it up and email it.
Informative. Okay. So homeowners, oftentimes referred to as fire, oftentimes, like I said, if you're getting a loan, you better have, you're going to be forced to get it because no lender out there will not let you buy a home without protecting the asset. If they're a cash buyer, frankly, I say you're insane to not get homeowners insurance. It's, at least with the condo, when you're a cash buyer, you have a little bit of coverage because there's a master policy involved. But as a homeowner, you don't get coverage. That house goes for any reason, you are up a creek. All right. So it's normally most of the preferred ones, which I recommend people to buy, is just the all risk, meaning that it covers everything unless things are specifically excluded. And in our market here, earthquakes and flood are excluded. In the East Coast, hurricanes and winds are excluded. Believe it or not, if a hurricane hits our homes here, or high winds, we are covered under a all risk policy. So again, very much like the condo, you'll see many common things in coverage. So, but a homeowner, the most important thing is it covers the dwelling. What this is all the fixtures that are attached to the living quarters. So basically what I say is, if you can go on the roof and continue to walk on it, and there's an attached garage, then that attached garage is part of the dwelling coverage. All right. Or if there's a patio or deck or anything. However, if there's a detached garage, meaning that you go on the roof and then you have to climb down to climb back up on the garage roof, then that garage is not part of the dwelling. The other thing that is covered is other structures, and that's often 10% of the dwelling amount. So what that typically is detached garage, storage shed, fences, driveway, retaining walls, gazebos, whatnot. Okay. Again, 10% of the dwelling amount is often attributed to other structures. Personal property is always covered on this. Now, many companies on preferred policies will take 70% of the dwelling amount. And if you want replacement costs on your contents, you'll have to get that. So if I'm insuring Pauline's house and that house is $1 million to insure, we're going to be giving her $700,000 worth of content coverage. And Pauline says, Mark, I don't want to pay for that. It's crazy. I don't own that much. I don't even own 70,000. Tough luck. You have to get it if you want replacement costs. It's just part of the formula. So, unfortunately, and that's pretty standard. It doesn't matter what company you're a part of. Loss of use. Again, this is for if Pauline buying the house and the house burns down and she is not able to stay in it, we will pay for her to be put someplace else. And while the house is being rebuilt. So let's just say Pauline buys one of these mega mansions in Arcadia, that's 10,000 square feet. Companies cannot say, well, Pauline, we'll put you up at a Motel 6 for 10 months while your house is being built. They have to try as much as they can to give her the same standard of living that she's accustomed to. So that's why it's important to have a reputable company that the loss of use that she can utilize on that. These personal liabilities are even more essential on your own home. But again, this is the stuff where if you're found where somebody got injured on your property, and happens to sue you and all that, you will be covered for that. Now, all policies, preferred policies, normally come with about 100,000 in liability. In this market, we are, unfortunately, one part of bads in California is we're in a very sue happy state. So what I often tell our clients is if they own a nice house, they better up their personal liability limits, because an attorney is, and I hope there's not too many attorneys on this, but they're, a good attorney is going to come after you for all that they are entitled to. And that oftentimes can be way more than $100,000 on a serious dog bite or a slip and fall. And then we talked about, let's see, whoops, I'm going the wrong way. We talked about medical, right? So that's a guess where they're accidentally injured or on the property, regardless of fault. Okay. So this cannot be somebody that's somebody that lives with you. So it can't be a resident relatives, and it can't be, you know, a boarder. But on the whole, it's, you know, Pauline's throwing a party and one of us gets injured, and a medical comes out and they charge me $800 for it. Pauline can say, hey, I want to take care of it. Mark, I'm going to file a claim through my medical payments. And so she does. So here's something that happens. And unfortunately, in my business, I've seen it all, you know, partly because of our own culture, the Asian culture, whatever. We want the least expensive, you know, just give me a cheap policy. And so what people don't realize is that oftentimes what you see is not always what you get. So let me give you a scenario where you see that you got company A, company F, company S, company CFP. I'm not naming names, but what I'm going to show you is all of these three companies are affording $600,000 of coverage for this house that Pauline bought from Sylvia. And so all the premiums are listed below. Our natural inclination as human beings is to say, well, it looks like all the coverages are same. So let's Pauline, you know, as bad Sylvia's recommendation, Sylvia's going to say, let's go at that $900 policy. Why do you have to pay $95 more a year for the same 600,000? So Sylvia refers Pauline to this company that she buys that last policy, and the banks basically, if there was a lender involved, the bank will accept it, and so escrow closes. Here's what happens. All right. Now the house burns down and the house costs $850,000 to rebuild. Well, you would say, how is it, Mark, that a house can cost $850,000 to rebuild when you told me that we can insure this house for $600,000? With a show of hands or anything, does anybody know what has happened to just wood prices in the last 4 months? They have been upwards of 25 to 50% higher. Just wood alone. Forget anything else. If you know anything about construction costs, that's what has happened. Steel, wood, and all that. It's crazy, but the demand has been going. Also, if you guys remember in the brush fires that happened 3-4 years ago, if there's a concentrated claim in one area, what tends to happen is there's a limit on the number of builders that are in that area. So if on a slow economic times, I am Mark Wu, contractor, and I'm getting people, and Pauline's going, your price is too expensive, you better give me lower. I'm going to say, okay, how low do I have to go to get your business? Because I'm hurting. In a high demand environment, when Pauline says, you know what, Mark, I don't want to pay your price, I'll say, fine, Pauline, don't. Because you know what? Sylvia wants to get into her house and she's willing to pay me 20% more than you. And so she's going to go with my bid, even though my bid is higher. And so that's how a house could cost $850,000 to rebuild, because material costs have gone up. Also, it's not an actual science when we determine replacement costs. Every company is estimating based on their formulas what it's going to cost them to rebuild. So there's something in the policies called extended limits. All right. And what extended limits is that a company like the ones I represent is going to say, you know what, Pauline, we think that based on the information we have told you about your house, that 600,000 is enough to rebuild. But we have put an extra cushion in there, and it's called extended limits. And my company is giving 50% additional coverage. So what that means is that whatever coverage amount we have will go 1.5 points above that. So that's how I came to the 900,000. Does everybody see that? So it's 1.5 times the 600,000. So the maximum in event of a total loss is 900,000. The second company may have a limit of 25%. So what they do is go 1.25 times the 600,000. And that's how they came up with the 750,000. The next company has a limit of 20%. And that's basically 1.2 times the 600,000. That's how I came up with the 720. And the last one is a specified limit policy, the scariest type of policies you want out there, but the cheapest because it's a strip down. And basically what you see is what you get. You don't get a penny over that dollar amount of coverage. So how did this work out if Pauline has a claim of $850,000? Well, if she was with company CFP, then she's going to have to pull out $250,000 out of her pocket, because once they come up to that $600,000 and write Pauline's contractors a check for $600,000, they go, bye-bye, we've closed the file, your claim has done. Pauline can kick and scream all she wants, but she's not going to get another penny involved. But let's say she was with company S, all right? If her claim's 850, that company's going to pay 720,000, and she's going to pay 130 out of her pocket to make up that difference between the 850 and the 720. But company A's policies goes all the way up to 900,000, so she doesn't have to pull out a penny out of her pocket because they're willing to pay all the way up to 900,000 to rebuild. So would you say that in all looking, you can see, hey, it's not about just saving the 100 or 200, but really what you want to know is not so much what are we covering on the 600,000 point, but you want to know what is the maximum amount that this policy will pay. So if I've not scared you enough, all you homeowners out there that have insurance, you need to, after my class, call your agent if you don't know how to read your policies and just say, hey, the policy, my homeowner policy I bought with you, can you just tell me what the maximum amount of insurance it will pay in the event of a total loss? And that's the figure you really want to know. You don't care about the dwelling amount as much as you do about that last extended limit amount, because that's where the true value of a policy is. So what's the 5 key questions I've always taught my realtors what to do? Actually, let me back up. I didn't see the slide, but let me look at something. I think I missed a slide in here. I did. I think this was my short version, so I pulled the wrong one. But what agents often ask me, well, what does your normal homeowner policy cover? So just wind, hail, explosion, all right, flying objects. And so what are not covered? Interior flooding from a bursted pipes are, but surface water flooding is not covered. You have to buy a separate policy here. Fortunately, in the San Gabriel Valley, we're not under any flood zones, so lenders don't require it. But if you have clients in the beach area and whatnot, their lenders are going to require that, and the lenders will tell you because they somehow have something that tells them if you're in the right zone or not. So it's not even based on the disclosure reports that you guys get from our disclosure folks. So, but the lenders will know that. And then earthquake is not something that's part of the policy, but you have to buy a separate policy on. So now let's go back to the 5 key questions that I think is key if you don't remember anything. And again, it's what is the max amount your policy, Mr. Insurance Agent, will pay in the event of a total loss. So we want to know what that 900,000 figure is, what that 750,000 is. We don't care to know what that 600,000 figure is as much. Second question is, in the event of a covered loss, is my personal belongings going to be covered under replacement, or is it going to be covered under actual cash value or depreciated? So that Louis Vuitton purse that Pauline tends to buy, that I see her with, if she has a loss, a fire loss and all that, if she has actual cash value, then they're going to say, well, the claim is based on whatever somebody will pay her on the open market for a used purse, or a used 10-year-old TV set, or a used 10-year-old washing machine and whatnot. If she has replacement costs, even though her washing machine or her her TV set is 10 years old, they'll buy new for old. They will buy her like quality, like size, like equipment. So it's super, super important that it's not depreciated in it. She may have 100 dresses, and 50 shoes of stilettos. What can she sell those in the open market as used? If you've ever done a garage sale, people don't even pay half. They pay pennies on the dollar, meaning that they may want to pay you $1 for something that you paid $100 for. That's what you might get if you have it depreciated on your clothing. However, if those shoes and clothes cost a couple $100 and you have replacement costs on your contents, we will come back and buy you new for old. And then does your policy protect you against liability issues that you are legally liable or obligated to pay in event of a bodily injury that's sustained by somebody? The FAIR plan doesn't have liability as part of the policies, but most preferred insurance providers do have at least 100,000 in liability. And then yours a super important one is building code upgrades. All right. Anytime you have a loss in any of the cities around here, I've not seen one city that doesn't do that. They will make you build to current building standards, whatever you are rebuilding. So if Pauline had a kitchen that burned down, all right, and she didn't have GFI's electrical, outlets on that, and her studs were let's say they were her studs were 24 inches apart, her building studs, and now the requirements are, hey, they got to be 16 inches apart. That's more wood and stuff and whatnot. And then her windows were not energy efficient, and they made her bring in energy efficient windows. We would pay for that if you had building code upgrades. But if you don't have building code upgrades on your policy, what they do is the companies will say, Pauline, we'll pay you for what's there. And if there's any additional costs associated with bringing it up to current building standards, you got to pull that out of your pocket. And then naturally, another important one is, does it pay for her to be put in someplace else? Again, that 10,000 square feet mansion in Arcadia that she was in, does she want to be put in a Motel 6, or does she want to be put in another house while her house is being rebuilt? So super important. Here's my contact information. If you have any questions, I'm always available. We have a few minutes left for any questions you may have. I just hope that the class was very informative and that I've assisted you, but I'm always available. Like I said, I've been a consistent member. I even consistently attend the Zoom meeting. So always there for you guys.
Okay, yes, we have a few questions and we might not be able to tackle them all, but those that we can't, they can always email you, and then that way we can get those answers that way. Okay, on the ones that I didn't touch on earlier, it says, does the HO6 insurance cover wild animals destroying our properties?
And the answer is no. And that includes vermin and infestation. So if you have things like termite damage and all that, that's not a covered peril, unfortunately.
Okay.
And that's the home or the condo HO6. It doesn't matter. There's a good question here about other structures. So this is actually, I forgot shortly on that. So more and more people are building ADUs and whatnot. Super, it's a whole different topic that takes a lot. But the most important part of that is you can always bump up. So if I have a homeowners, remember I put 10%, and this question was by Kui Wen. So let's just say that there was a detached garage and you converted that detached garage and you put another 80 to 100,000 in on that. You can increase your other structures more than 10%. So if you guys know that there are a lot of other structures in there, like, hey, I sell Pauline a house and she has a pool, a gazebo, whatnot, and detached garage and a pool house, then I better bump up. I better tell the insurance agent, hey, there's all these things so that there's sufficient enough to rebuild. Because unlike the homeowner that has the additional 50 or 25 or 20%, the other structure is a set limit thing. So you can't add any more extra cover. I mean, it won't pay for any other coverage. So you have to make sure you increase those limits. And then, that's good. Then Wai Ming said, if anyone wants to build a ADU or big project within the next 3 months, get the, okay. He's dealing with that issue, but on the ADUs, this is super important to have a conversation with the insurance agent, because you might have to buy a separate policy, or it depends. Like for instance, let's say if Pauline is going to stay in the ADU, but she's going to rent out the home, and the home is 10,000 square feet and the ADU is 1,000, she can't have the homeowners on that. She can only have the homeowners on the ADU, and we put a landlord policy on the front unit. So it gets very complicated on that. And it's super important because you have several issues. You have liability losses due to your tenant. You have loss of income due to income loss. Because, man, some of these ADUs in some of these cities that I've heard about, many of my my homeowners are having their whole mortgage paid by the ADU. You know, so something great. And talk to your realtor if they can help you in getting these homes that have ADU. What about ice storms happened in Texas recently? So basically, we you know, we aren't going to have ice storms here, but we will have flooding. So like I said about our policy, if it's a bursted pipe, most likely a preferred policy will cover for those. But if it's a leak pipe, that's a maintenance issue, and you're going to be denied coverage.
Well, you never know with global warming, things change, you know.
True.
But anyway, one question that they asked, are we going to get the PowerPoint presentation as well on the?
That's going to cost you about 10 referral. I created that, so I didn't put my company's name because technically it's not approved by them. I made it, so as long as you say it was from AMS agency, utilize it, and hopefully I don't get in trouble by anybody.
Okay.
And
you can
you're
see
welcome
you can
to
see the
send that out,
questions, or
Tom. You could contact the board and they can send it to you or whatnot.
okay.
Just don't give it to my competitors.
Okay. And you can see all the questions that were brought over.
I enroll and certify.
You can tackle some of them, and then the rest of them, and they can just email you with the questions, those that you don't
well,
get.
this is
to finish
another
up on.
class in itself, but what is the difference between a homeowner policy and a landlord's policy? Major difference is the structural is about the same, that we cover, but where we don't cover the personal contents of the landlord, I'm sorry, the tenant, versus we cover the homeowner's personal contents. All right.
Okay.
So, and then one we pay on a landlord policy on an investment thing, if it burns down, and let's just say that same $10,000 square feet home that Pauline's owned in Arcadia, and she's renting it out to Sylvia for $15,000 a month, right? Not unreasonable, but a house like that would run that. We're going to pay Pauline if Sylvia can't stay in that house for 10 months, because Pauline can no longer collect rent if Sylvia can't use the house, right? So Sylvia's going to go someplace else. And so, but she's going to lose that income. And if she still owes money to the lender, she doesn't want to be paying the lender. How is she going to make up that difference if she's dependent on the rental income? But a good landlord policy will pay a loss of rents. So meaning that if she's accustomed to getting $15,000 in rents, we will pay that $15,000 for 10 months. And with that, I am done. And
yes, you are. Thank you very, very much, Mark Wu. Please utilize him as our affiliate. He's been with us for quite a long time. Okay, and now you have his contact. You can ask him any questions. He's there for you, for us, for all of us. Thank you very much, Mr. Wu. Okay,
thank you.
There it goes back to you, Pauline.
I want to thank you. Thank you. A lot of thank you, because this time I visit Houston with my family for Mother's Day, and I try to make offer there. I cannot get a property, but I do learn. So that question has come out, a beautiful house interior, very open floor plan, just like a high-end Arcadia house, right? But they do have a problem for the storm, and they are insured by Allstate. So that's why I'm asking you for, like, maybe they will get a trouble for get a new insurance from your company or no. So we can talk about that later. But today I figure out, Mark, you're so good. And we think 45 minutes definitely not enough for you to teach and share a lot of information with us, right? Sylvia, do you agree with that? And everyone, when you stay here, we think about education is so important. Knowledge is really power. I saw another 27 people still here. Join tomorrow, very important, at home with diversity. Only pay $19. Original price is $99. Member benefit, don't miss out this good chance. After the new life, normal life, you got to pay $99. Okay, I guarantee you, no more 19, one night only for member. If your friend, a realtor like Judy Chow, you know a lot of realtor out of San Gabriel board, right? Tell them where you can get a $29 for one-day class and get certified by NAR. And this certification you can apply to 3 designee as an elective point credit. Judy Chow, you will be my best promotion person for the out of area. And I got a little bit exciting for next Tuesday. I want you all coming for Attorney Paul Chang. Our handsome attorney Paul Chang will come to talk eviction in the pandemic where he's not sharing the residential. He is not sharing residential. He will share the commercial and the others. I think that will be very valuable time for us. Checking and don't miss out. And especially this Thursday, Emma's breakfast meeting is a beautiful program for the scholar receiving by St. Gabriel Foundation, our foundation department. I want to say that. And then come together. Every class is so valuable, informative, present to you for our lovely board, West San Gabriel Valley Realtors. Thank you, Mark. Thank you, Sylvia, Judy, everyone. And I know Frederick always support, and our president's here, Ching. Everyone, join every classes. See you tomorrow.
Thank you. Bye-bye. Have a great day.